Hey everyone, Brad Palladini with Palladini Law, where we help taxpayers across the country solve tax problems with the IRS. And today we are talking about Form 433 B, Collection Information Statement for Businesses. Now, we have posted a series of videos on the different collection information statements. The 433 B is specifically for businesses who owe tax debt to the IRS. There are other forms for other situations, but the Form 433 B specifically is for if you're a partnership, an S corporation, or a C corporation who owes IRS tax debt. If you're a sole proprietorship, you could get away with just completing a Form 433A or a Form 433F. We're going to go step by step on this Form 433B, giving you some tips on how to complete it. But you should know ahead of time, if you're completing a Form 433B, the odds are there's a revenue officer assigned to your case. A revenue officer is a specially trained IRS employee who's trying to collect the tax debt as quickly as possible from the business. Typically, this is payroll tax debt, which the IRS takes more seriously than other types of debt. So if you want some tips on how to deal with a revenue officer, we are posting a video on that shortly. If it's already out, we'll post a link to that. So let's go through the 433B section by section. Section 1 of the 433B is just asking for background information about the company. The key here is really to fill out the form completely. If there's a section that doesn't apply, you should probably just write NA, so the revenue officer or whoever is reviewing this form knows that it doesn't apply to your business. If you leave a section blank, the IRS employee doesn't know if you just forgot to fill this form out or if it doesn't apply to you. So you want to try to make their jobs a little bit easier by just writing NA in the section. That signals to them that it's something that just doesn't apply to your situation. Section 2 of Form 433B is asking for contact information about business employees. Why are they doing this? Most businesses who are required to fill out a Form 433B owe payroll taxes. There's a portion of payroll taxes which the IRS can hold an individual personally liable for. So most people think if you have a corporation, it's a separate entity from the person. And so if the business owes tax money, that doesn't mean that I personally owe tax money. And that's generally true, but the exception is payroll taxes. Because with payroll taxes, you are withholding a portion from your employee and turning that over to the IRS on your behalf. So you're holding that money in trust. It's not the business's money. And because of that, the IRS has a mechanism where they can hold responsible persons personally liable for that tax debt. So in section 2 of the Form 433B, it's asking for a list of names and it's asking who's responsible for paying the payroll taxes. So take your time in completing this section, because if you say an individual is responsible for paying the payroll taxes and they are not, it could lead to a huge headache for them in the future. Section 3 is trying to gather some background financial information about the business. They want to know if there's any lawsuits involved, and they want to know if there's going to be any increase or decrease to the business's income. Now, the whole purpose of completing a Form 433B is for the IRS to determine the business's ability to pay. So that would be the monthly amount or a lump sum amount that the business could pay to satisfy the tax debt. So they want to know if there's going to be an increase or decrease to income, because if they set you up on a payment plan, they want to know, hey, can we increase that payment plan in the future because you said your business income was going to increase? Or is it going to decrease in the future and you're not going to be able to afford the payment plan? If you anticipate the business income increasing or decreasing, you want to notate that here and provide a detailed explanation. The IRS also wants to know about any lawsuits outstanding, because they want to know if there's any other creditor out there who may be trying to collect from you. Or on the other side of it, they want to know if the business is going to come into some money. Potentially they're suing someone for accounts receivable or some other issue that could provide a lump sum payment to the IRS. Now, this entire form will need to be signed under penalties of perjury, so it's really important that you provide accurate information here. Section 4 is business asset information. So these are all of the assets owned by the business. This could be things like machinery, equipment, and vehicles. If you look at your last year's tax return, you may see a depreciation schedule, which has a lot of these assets listed. If you have good accounting records, you should be able to go through those and figure out what all of the assets are. The IRS is trying to determine whether any of those assets should be sold in order to pay the IRS. Or if you're unable to resolve the issue with the IRS, they're trying to see if they could seize all or some of these assets to satisfy the tax debt. So you're going to have to put the fair market value. Sometimes this takes a little bit of research. If it's an odd piece of machinery or equipment, you could go on different websites and try to come up with an appraisal for what that's worth. But again, you want to put accurate information, and you don't want to overinflate the value of this machinery or these assets, because the more value it holds, the more tempting it is for the IRS to seize or to force you to sell these assets. So again, you want to provide accurate information, do the best you can to come up with what the fair market value of these assets are, and also include any loan or other encumbrance against the asset, so the IRS has an idea of how much it would actually be worth to them. Section 5 of the 433B is really the most important part of this entire financial statement. It's going to ask for the business's income and the business's expenses. So you can use a profit and loss statement as a jumping off point, but you do need to go box by box and complete this form. The IRS doesn't like when you just put the lump sum figure like 10,000 in income, 10,000 in expenses, and then say see profit and loss. You actually have to fill this out. Now you can use different periods to complete this form. You can use 3 months, 6 months, 9 months, or a year. And what you want to do is get a profit and loss statement broken down by each of those periods and see which period is most accurate for the business. So let's say you look at the last 3 months of your profit and loss statement, and it's showing net income of $50,000 a month. If you provide that to the IRS, they are going to want a $50,000 a month payment plan. But maybe you operate a business that is seasonal. Let's say you're a landscaper and the last 3 months were June, July, and August, which are the 3 busiest months of the year for your business. What happens in December when, there's snow on the ground and you don't do a lot of plowing and they still want that $50,000 a month? You're not going to be able to afford it. So you wouldn't want to use a 3-month profit and loss that shows your best 3 months. Maybe in that case, you'd want to use a full year of your profit and loss, which shows a $5,000 a month ability to pay, and then you have to pay $5,000 a month. At the same time, you don't want to show too much income, but it's also not good to show a huge loss. So let's say the last 3 months of the year were the absolute worst in the business's history and you lost $50,000 every month. The IRS could say, okay, well, why is this business continuing to operate? They're not paying their taxes, they're losing money month over month, and the business really can't continue. So let's go forward and seize what assets it has to make sure we're paid before anyone else. So in that case, again, maybe you want to use a year because maybe, again, you're a landscaper and you gave, December, January, and February, you don't do any plowing and you're just losing money for those 3 months. So it's kind of a Goldilocks situation here where, you don't want to show too big of a profit because the IRS will want a bigger payment plan. You don't want to show too big of a loss because then they will question the business's ability to continue. You want to try to provide a profit and loss that is accurate and that you can stick with. The key here is to show an ability to pay that you are comfortable with and that you can pay month over month. Now, not all expenses are included in the Form 433B. The big trip up that we see is non-cash expenses like depreciation. So depreciation, you're not actually paying anyone anything. And so this wouldn't be an expense included on the 433B. So you want to be careful in filling it out and making the appropriate changes from the profit and loss to this financial statement. So that way you are not showing more expenses than you really have or showing less expenses than you really have. So again, the Form 433B is used by the IRS to determine the business's ability to pay. Typically, you're going to be dealing with an IRS revenue officer.